Meta shares dropped by 25% today, and in this video I'm going to explain why I think that there's a potential for Meta shares to drop a further 20% down to $80 per share, and that's what I'm going to cover in this video. So guys, as you smash that like button, let me run the intro. What's up guys, and welcome back to the channel. And I know that that's not an intro that you are looking for. I know a lot of you guys are looking at Meta shares being under $100 per share and thinking that it could be a value opportunity, and I wouldn't say that you're wrong by thinking that it could be a value opportunity. In fact, it could absolutely be a value opportunity at the current price. But I do want to provide sort of like a counter opinion based on facts and modeling, which is what I'm going to try to do in this 3-part analysis of Meta's Q3 earnings. So without further ado, let's get right into it. And so you can see here that Meta actually opened up 25% lower than where it closed the day before or yesterday. And that's kind of crazy because a couple of months ago, a lot of us did not expect Meta to come under $200 per share. And when it was around $140 per share, I actually put out a video saying that it could very well drop further. Now we're seeing that drop. So we saw a 40% drop from the time that that video was put out. And you can see that year to date, the shares have come down approximately 71%, which has been absolutely nuts. I mean, Meta shareholders are now starting to feel like Alibaba shareholders. It's just been a wild ride for you guys. And high level, what's causing the shares to decline? Well, you guys know that the revenue decline is part of the story, but you know, this headline really doesn't hit on what the real issues are. And I think the real issues are the fact that there's going to be a sustained cash burn as they build out the metaverse, and profitability is declining across the board with Meta. And here are the key performance metrics relative to analyst expectations. These to me are somewhat meaningless, but if you are interested in them, you can see that earnings per share, they did miss. Revenue, they actually did better than what the street was expecting. Daily active users and monthly active users were pretty much bang on, and then average revenue per user was slightly lower. And this here is what actually is what I believe is causing the share price to decline, and I'll mathematically show it to you guys in video number 2 of this 3-part series. But notice that they're saying that beyond 2023, they expect to continue investing in Reality Labs and the metaverse. And so what that really is saying is that the cash burn is expected to continue, and they actually provided us with a number, and that number for capex is somewhere around, I think it was like $35 to $39 billion in 2023. And you compare that to $18 billion in 2021. So that's how much higher the cash burn is just over 2 years. Now, many people will tell you that part of the decline in the shares is the fact that advertising spending is seeing sort of like a headwind. But notice that a 3.6% decline in the face of serious economic headwinds, which was caused by pullbacks in advertising spend by virtually all major corporations, in my opinion, is actually fantastic. And so it's not as much of a top line story as it is a cash spend story, which is what I'm going to dig into next. But guys, I want you guys to note that just because revenue declined by 3.6% doesn't mean that if the Fed continues to raise rates, that we're not going to see further advertising pullbacks by advertisers in future quarters. And so 2023 is very vulnerable to an advertising spend pullback. And so as you forecast out revenues, you really got to take that into consideration, especially if there's going to be multiple rate increases between now and then. And so this is what I mean about the cash burn issue. So for 2022, we're running at a rate of approximately 30 billion. They've forecasted, or they've guided to around 32 billion in their conference call. And I expect that to continue. And, you know, they even told us that they expect that to be closer to 35 to 39 billion in 2023. And there's 2 ways to look at this. You can look at this as an investment and then forecast out higher revenues in the future. I sort of look at it as a cash burn because I'm not convinced that the metaverse will have the sort of uptake that they're expecting, I guess, internally. And so I eliminate this from my free cash flow calculation, similar to the way that we would handle maintenance capex. It's not necessarily returning revenue. So now you have 2 issues to contend with. If you use an earnings per share valuation, you have to note that the cash burn needs to come off that earnings per share calculation. The easier way to do it is just forecast using free cash flow. And I think that we're in a situation now where earnings per share is not appropriate to value Meta. Now, notice that high capex is not the only issue. A lot of people, and every YouTuber that I saw talk about this, is not talking about the fact that stock-based compensation is running high at over 11%. And compare that to the last 5 years, it's run at around 8%. Also, notice that R&D is a real drag on earnings, and so we're going to have to forecast this forward until we have more visibility. Now, this is what most of you might be doing. You might be using an EPS multiple, and on that basis, it's going to look very cheap. So notice that the valuation is $156 per share, which means that the share price as a percentage of its intrinsic value is only 63%. So it looks very cheap. And if you use a higher multiple, I'm just using 17.5 times earnings. If you use a higher multiple than that, the stock looks even cheaper. But remember, guys, that the EPS multiple assumes that you are either being paid out the cash or it's being reinvested in a way that generates sufficient future returns. I look at the capex as a cash burn, and so to get a better valuation, and in other words, to get a better understanding of how do I value the intrinsic cash flows that are coming to me, I have to use the free cash flow methodology as a basis for my valuation. So in other words, guys, I am not using EPS in this situation. Now, when we look at the free cash flow per share valuation, notice that we have a much less favorable picture for Meta, and I will walk you through exactly how I get to this valuation in video 2 because it's very detailed and it's the most sort of like complex analysis that I've ever done a video on, and I highly encourage you to watch video number 2 when it comes out. But now that we take into account and we completely forecast out free cash flow, which involves forecasting out capex, forecasting out stock-based compensation, all of that stuff, we get to a valuation of $80.50 per share. And that suggests that Meta is overvalued in this environment. That doesn't mean that I'm saying that Meta is overvalued. What it means is there is a possibility that it could be overvalued, especially if this free cash flow per share valuation becomes more of a reality. And so in other words, what am I saying? I'm saying that there's 2 ways that this thing can go right now. One of the ways is that those investments pan out, Mark Zuckerberg looks like a genius, and the stock skyrockets. The other direction that this can go is that the cash burn continues and even intensifies, or there's an advertising pullback in fiscal year 2023, which causes the net cash generated by the operations to be much lower than any of us are valuing right now. And so in other words, what I'm saying is that it's very hard to forecast out the future. It's not easy. There's no inevitability in this situation. And so I'm standing back. I'm not investing in Meta at the current moment. A lot of you guys are investing it, and I'm not saying you're wrong by investing in it. I'm not saying that you're wrong by suggesting that it's a cheap opportunity in this environment, but I do want you to hold off criticism until I walk you through how I get to that $80 per share valuation, which will come in video 2. And so when it is available, video 2 will be available right here. And until that becomes available, I'm linking the latest Alibaba video right here.